Everyone, this is Ben from Cheddar Flow, and this week is critical for the market just because after Friday we had some fear, especially with the news of Ukraine and Russia potential war breakout, and a lot of selling happened on Friday. So what actually happened was a lot of these tickers that you see on here on the flow overview, so like Tesla, AMD, Apple, are all at critical zones where they could have a major sell-off this week, or they could bounce off of that. And it's very interesting to see how the market dynamic works here because they all close at that major support level. So it's going to be interesting to see what happens if we gap down or gap up above it. But I do want to go over these setups today and kind of give you a sense on what could happen. All right, so first one that I'm going to go over here is Tesla. This one is literally half and half. We have 43% here to 57% call to put flow. So pretty close. Overall, let's contextualize though, because remember, this doesn't just show kind of where the emphasis is in terms of sentiment. We want to look a little bit deeper into the orders to get a sense on what these people are doing, if they are very bullish or bearish. So just looking through these, I'm eyeing ones that are pretty hefty in premium. I have it filtered for over 200,000. I'd like to see stuff over 500,000, but I just have it for 200,000 just for the purpose of the video. And I also want to see some out of the money orders. So these current spot price at this time was 856. I like to see that this person here was getting some 900 calls. Good to see that this is far out of the money, and it's for March 18th, so just within a month. Good to see that there is some bullish emphasis on here. However, there are some bears as well that we saw, like this one right here. They were trading it intraday for this 211 contract right here for the expiration. So the bears were out in full force on Friday. Again, we had that sell-off on SPY, and this right here shows that people were trading it because they were doing the 0-day to expiration on here. However, these types of prints, like the ones I'm pointing out here, are totally irrelevant for this following week because they already have expired. So these people were just trading intraday on Tesla, doing the 0-day to expiration on these. So these are totally irrelevant, which would bring down this put flow here. So that's why you can't just look, it can't just be black and white, call to flow, put flow on there. You have to look a little bit deeper. I'm looking at a lot of bullish emphasis, honestly, from Friday. So these people, again, were just trading. These are most likely going to be ones that are held for the following week because these were happening, these prints were occurring later in the day, potentially to hold over the week, and they were far out of the money. So we have a lot of 940 calls here. Very good to see that. Some 885, 890. So also really good to see those as well. Here's when it starts to get interesting. We had a lot of 780s, which is pretty bearish for Tesla. And what is interesting about that is we are right on the brink, like I said in the intro of this video, of a potential major sell-off or a bounce that continues up. And the reason I say that is because we're at the bottom of this wedge right now. So the wedge is the two green lines. It's the top of the wedge and the bottom of the wedge right here. We are testing the bottom of the wedge for the 5th time, almost 6 actually. Could consider it to be 6. You can go all the way back to right here. And count through here. But if we do fail to bounce off of this level, there is going to be quite a bit of selling on Tesla, and that means the market is going to continue to sell just because of how much weight Tesla holds in it. So it is critical we hold above my line, which it did bounce off of on Friday of 853.75. If we do not, it needs to reclaim it the next day. If not, then this thing is screwed and it's going to continue to sell off. So these people are betting on that. Right now, it's not ideal risk reward until that level is broken to maybe go for the 780, but they seem pretty confident on it. And this is something to watch out for just because it could go opposite way than the bulls want here pretty quickly as well. So you do have to be careful. There is good risk reward for the upside here. So if you want a good risk reward setup, around here would be ideal if you want to go long. However, you do have to make sure that you are conscientious of the fact that this is the 6th time we have tested this level. And the more times we test a certain support level, the more likely it is to break through. So just make sure you are aware of that and go accordingly. All right, the next ticker I want to talk about is the VIX. Remember, this is the volatility index that tracks volatility and fear in the markets. What is very interesting, and I'm using our historical flow here, the historical flow tab on the side of Cheddar Flow. What I found very interesting is if you look back on February 10th, which was Thursday, remember the big sell-off we had occurred on Friday, which was February 11th. If we look at February 10th, it's actually very interesting to see how active the flow was on VIX. Remember, we did not have that big sell-off at all. I think VIX was up like 20-something% at some point on Friday. So before the big move happened, some people were loading calls on it, and they actually were pretty aggressively out of the money as well. So just looking through this, you could see some crazy ones. We had a 35 strike with 524,000 in premium here. Some other crazy ones as well. A lot of in the 20s. We have a 50 striker here. Not that much premium, but still interesting to see that person was aggressive. And then we have some big ones over here. We have a 37.5 strike. They got 10,000 contracts of that, which is pretty crazy. And then another 10,000 contract order, which was worth 2.2 million in premium for that 27 strike. So these people were all buying it the day before stuff started to heat up and go crazy with all the Ukraine news. Another one here, 5,000 contracts. And it is not that common that this much activity occurs on the VIX. Just because it's just not that common that we see this many prints on it. So interesting to see that this happened the day before. If you guys want to check out February 11th as well, I'll do that too. We'll go to the top here. And there was some buying into it. This person was pretty aggressive. They got the 27 strike at 2.5 million in premium there. So interesting to see that. But mostly this cooled off the day that the sell-off occurred, which is interesting to see because the majority of the move actually happened the day prior. That is why it is very crucial to check on Cheddar Flow VIX each day to see if there is a potential for increased volatility the following day or maybe in the following week or month. Always good to make sure that you're hedged and know what potentially could happen in terms of fear in the market, because big money tends to know moves before they do happen. And the last ticker I want to talk about is Facebook. This one, everybody for some reason thinks that dip buying it is kind of like the key thing to do here and the smart thing to do. And they expect some form of a move within the next maybe few months on it for it to have a big bounce, or even like near like maybe in a few weeks. That is not going to happen on Facebook. And the reason I say that is because there was so much volume to the downside with a lot of downward pressure after that earnings report. And if you look historically at other earnings reports that had similar outcomes, it actually continues to fall after, or at the very best case, it just consolidates in that level for a very long time. Very rare you see one of these big stocks have a 25% drop off of anything more or less earnings. And the fact that it fell that much with that much volume to supplement it shows me this thing is going to be down for quite a while. Doesn't mean that it can't reclaim all-time highs at some point within the next for years or anything, but the fact that a lot of people are buying it and thinking, oh, this is definitely the bottom and all that kind of stuff, and think, oh, it's going to bounce pretty soon, I would not be so sure about that. And the first reason why is the one I shared with you in terms of experience of other earnings reports falling down quite a bit. But also the flow is telling us, look at this right here, 48% to 52% call to put flow. This thing is very, very mixed. The bulls or the bears can't take a handle over this thing, at least right now. And the result of that is just going to be consolidating within a range. You are going to see some pops. You're going to see some drops as well. However, it's going to stay relatively in that same range. And I'll just paint a picture here for a bit. We have the range 208 is the eventual support. I've been talking in the Cheddar Flow Discord about 208 getting hit. Everyone's like, no, I'm buying here. This has to be the bottom. No, it's not. We're probably going to hit 208. I would not be so sure about buying like up here like they were. Just be patient with it because the opportunity will come to you. It's always concerning when there's a lot of people that are very bullish on a ticker. It tends to not go their way. But right here we have 245 as a large dark pool print that occurred. Most likely was a sell after that earnings report. So this is going to act as a support or resistance in the future. And then also this 234 is pretty key as well because it was a previous gap, which I talked about in one of our videos, previous bottom of the gap, which acted perfectly actually on Thursday as a rejection. Then we fell off of that as well. So as of now, 208 to 234 is going to be the range that it trades within. This could be a viable covered call strategy to potentially sell those contracts in. But otherwise, I am not going to go long on any direction on this thing. This thing is not going to move that much other than within the range, like I said, which is very tradable if you wanted to. It is fairly wide, but for people that are interested in like long-term or like buying some leaps and stuff, you got to be careful with this thing because you could have some theta decay. Even though it is leaps, this thing is going to be down here for quite a while. So continue to watch the flow, see if it's becoming super call heavy focused for like maybe a week or something, and maybe that could give you a sense on when it could bounce. Same thing goes for puts if it continues to fall down. But as of now, very mixed in the flow. It's trading within a range, so I'd be very careful on this one. And I'm talking to a lot of people out there because I know a lot of people are buying this thing right now. Just be very careful because it still could have some room to fall. But yeah, otherwise, this will be it for me today. Should be a lot of setups this week, so make sure to check with the, first of all, Discord that we opened up. That link is in our Twitter, and then also just follow our Twitter. We have a lot of our mini clips that show some good setups throughout the week that you could check. But otherwise, appreciate you guys watching this video. Make sure to subscribe below, and I will see you next time.